Hey, what's up everyone? It's Kashif. We've all heard the saying, invest in the stock market, it's how you build wealth. But let's be honest, the market can feel like a roller coaster, right? One day it's up, the next it's down. It can be confusing, even intimidating. But what if I told you there's a way to navigate the market with more confidence and clarity? A way to make smarter investment decisions that can help you build long-term wealth. Today we're going to dive into the brilliant strategies of Benjamin Graham, the father of value investing, and learn how understanding his concept of Mr. Market can be the key to your financial success. So whether you're just starting out or you've been investing for a while, stick around because this video is packed with actionable insights that can help you become a more confident and successful investor. Let's get started. Now, before we jump into the nitty-gritty of investment strategies, we need to understand the mind of the market itself. And to do that, we need to meet Mr. Market. See, Benjamin Graham had this brilliant way of personifying the stock market. He asked us to imagine the market as this guy named Mr. Market, who shows up at your door every single day. Now, Mr. Market is a bit of a character. He's moody, he's emotional, and he's anything but rational. Some days, Mr. Market is feeling super optimistic, like he just won the lottery. He's euphoric, seeing nothing but green, and he's offering to sell you pieces of amazing companies at ridiculously inflated prices. He'll tell you, this time it's different. These companies are the future. They're going to the moon. But then, there are other days when Mr. Market is down in the dumps. He's pessimistic, scared, convinced the world is ending, and he's practically begging you to take his stocks off his hands at dirt cheap prices. The thing is, Mr. Market doesn't actually care about the true value of the businesses he's selling. He's all about emotions, reacting to every bit of news, every rumor, every tweet, and that makes him incredibly unpredictable. Here's the key takeaway. Don't let Mr. Market dictate your investment decisions. Remember, you don't have to buy or sell anything just because he's in a particular mood that day. So, how do we deal with this unpredictable character, this Mr. Market? Well, that's where the strategy of a defensive investor comes in. You see, not all of us have the time, the energy, or frankly the desire to try to analyze Mr. Market's every move. We have lives, jobs, families, and trying to outsmart this emotional roller coaster every single day just isn't realistic or sustainable for most people. That's where being a defensive investor comes in. Instead of trying to time the market perfectly, defensive investors focus on the long game. They understand that the market is driven by emotions in the short term, but in the long term, it's the underlying value of the businesses that matters. So what does a defensive investor do? They ignore the day-to-day noise of the market and focus on identifying undervalued companies with strong fundamentals. They look for businesses with a history of profitability, a solid track record of growth, and a competitive advantage in their industry. Think of it like buying a house. You wouldn't just buy the first house you see based on the seller's mood that day, would you? No, you'd do your research, you'd look at the neighborhood, the foundation, the roof. You'd assess its true value. Defensive investors treat stocks the same way. They look beyond the market hype and focus on the fundamentals. They patiently wait for Mr. Market to offer them a great deal on a solid company. And they buy it, knowing that over the long term, quality businesses tend to appreciate in value. Now, you might be thinking, okay, that all sounds good, but how do I actually find these undervalued, good quality companies? Well, that's the million-dollar question, right? But here are a few key things to look for. First, look at their financials. Are they consistently profitable? Do they have manageable debt? Are their revenues growing? These are all important indicators of a healthy business. Don't get scared off by looking at financial statements. There are tons of resources available to help you understand them. Second, consider their management team. Are they experienced? Do they have a good track record? Do they act in the best interests of shareholders? A strong management team can make all the difference. Third, think about their competitive advantage. What sets this company apart from its competitors? Do they have a unique product or service? Do they have a strong brand? A sustainable competitive advantage is essential for long-term success. Now, I know this might seem like a lot to consider, but remember, you don't have to be a financial expert to be a successful investor. There are tons of resources available, like online research tools, financial websites, and even investment communities that can help you learn and grow as an investor. The key is to be patient, do your research, and don't be afraid to ask for help if you need it. Remember, investing is a marathon, not a sprint. Focus on building a diversified portfolio of undervalued companies with strong fundamentals, and let time work its magic. So, there you have it, the key to understanding Mr. Market and becoming a more confident investor. Remember, don't let his emotional swings scare you or dictate your decisions. Instead, focus on the fundamentals, be patient, and invest for the long term. If you found this video helpful, be sure to give it a thumbs up and subscribe to my channel for more videos on personal finance, investing, and building wealth. And as always, I'm here to answer your questions, so please leave them in the comments below. Thanks for watching, and remember, the path to financial freedom starts with understanding Mr. Market.